Hi and welcome to this portfolio update and also a look at what dividends I've been paid in the month of March. It has been a bit of a March madness for many different reasons. Let's have a quick look and see what's been going on moving the markets, and that's why I've got a dividend bonanza going over the last month. First of all, we had the Fed decided to hold its overnight borrowing rate between 5.25% and 5.5%. The next day, guess what? We end up having the Bank of England Monetary Policy Committee holding interest rates at 5.25%. If we have a look and see what the markets have done sort of as a rally coming on behind that, you have the S&P 500 is up 3.56% over the last month. The Russell 2000 coming in at 4.28% up over the last month. And you can see this big rally after the Fed sort of were a little bit positioning and saying how sticky inflation had been. And if we have a look at it, the inflation rate in the US actually went up from 3.1% in January to 3.2% in February. Nasdaq not up as much as anybody else. So what does this mean? Does this mean that the strength and growth of the Magnificent Seven and some of those other companies within the tech sector are starting to go off the boil? Who knows? But we have the FTSE 100 on a bit of a run after the Bank of England sort of held things steady at their last meeting of the Monetary Policy Committee. If we have a look at what's been going on within my chart, we just see a nice steady growth moving upwards over the last month. Currently, this Trading 212 portfolio has broken through that £35,000 mark and is sat at just about 7.5% up. There are some stocks, however, doing better than others. So let's jump in. Some of these miners aren't doing particularly well, and we've got Anglo American has moved up over 10% over the last month, so that has made things look slightly better, and there has been some news coming in on Anglo American with the Tribe Technology sort of completing that first autonomous drill rig. It is very cyclical in its dividend payments, and at the moment we are sat at a 3.92% dividend yield. And next, we've got British American Tobacco. For the 60 shares that I hold in this, it is up 1.45 over the last month and paying almost 10% of a dividend yield. So this is one that I just continue to hold in here. It is down towards the bottom end of that 52-week range, so potentially something that I might add a little bit more to. DS Smith has been on an absolute rip. I think yesterday it jumped. At one stage it was up about 10 or 11% on the day, but sat in there up 24.5% over the last month. This big jump was based on DS Smith securing the potential counterbid from the US-based international paper. Currently sat right at the top end of its 52-week range and paying a 4.54% dividend yield. So I do have a pending limit order in here on Evolution Gaming, and I am looking at just trying to get into this because I do think there is potentially some upside on this company. Buying into this more as a growth stock as opposed to anything paying me a dividend, because at the moment it is quite a small dividend coming in at about 2.3%, and this is basically it is one of the larger companies within the online casino industry. Glencore thankfully has been on a bit of a rise over the last month, picking up almost 18% growth over that time period, and this is another example of one of these miners that has massively cut its dividend. So you always have to be very wary when you are buying stocks. I've bought into this one and I'm just going to hold on to it for a little while, let it run. I may cut it down and I may then look at potentially coming back in as we start to see the mining industry pick up again. UKW, one of the companies that I've spoken about recently and done a video on. You can see it has been a little bit choppy over the last period and currently up about 2% over the month. It did take a bit of a dip earlier on in the month when it had reports of decline for its financial year 23 profits. But it has bounced back again in the last few days. Currently sat with a dividend yield of 7.33. And remember, this is one of those investment trusts that looks at matching its dividend growth with inflation. GSK up about 2.25% over the last month with a dividend yield of 3.04 at the moment. IG Group up almost 3% over the last month, and as you can see on this chart, in around the time that the Chief Finance Officer and Chief Operating Officer steps down, you see the stock take a bit of a jump. IG paying a dividend of 6.26%. Intermediate Capital Group, it's up almost 10% over the month at 9.66% up, and I'm coming in with a dividend yield of 3.79%. IUKD, done a bit of a run over the last month, up 5.14 and currently paying a dividend of somewhere in the region of 6.28%. This one is obviously one of those ETFs that I am seriously potentially selling out of this and then using the money from this to spread that out into some other ETFs or buy a little bit more into some of the ETFs that I already hold. I'd be interested if you have any thoughts of other ETFs that I might want to go and have a look at that pay me a reasonable dividend but also have a better growth, because if we look at the growth of this ETF over time and we look at that out to a max, it is down 17%. Even over the last year it is only up 5%, so potentially it is an idea to come out of this one and look at reinvesting £2,000 into something else. If you're getting any value in this type of content, I'd love it if you could hit the like button and think of subscribing. Next, we've got Legal & General up about 5.4% and still sat with that nice juicy dividend yield of 7.96%. Lloyd's has been doing reasonably well over the last month and 5.34% of a dividend yield. National Grid, another company that is doing reasonably well at the moment, coming in with about a 4% growth. One thing that is being flagged here is sort of the rise in UK power as a result of all of the AI growth that's taking place. So will that see growth within some of the utilities sector? Let's keep our eye on that one. As with many of the utilities, paying just a nice little steady 5.39% of a dividend yield. Pfizer and many of the other drug companies that we know from the pandemic still struggling a little bit, even though it is up almost 3% over the last month. But what I do like about Pfizer is it is paying that dividend yield of 6.09% at the moment. Primary Health Properties, this is one that potentially will benefit when the interest rates start to come down. This is backed by GP surgeries and the like. They are the tenants sat within the primary health property portfolio, so they are always reasonably safe and reasonably confident that tenants will pay their rental payments, and looking at dividend yield of 6.5%. My good old monthly dividend payer. This one just continues to keep going up, and as with primary health properties, as interest rates start to reduce, potentially that will make it slightly cheaper for them to take on debt. Much of it is longer term debt that Realty Income do hold, but it is paying a nice dividend yield of 5.74%. And don't forget, you have the withholding tax because this is a US company. Trig up a little bit over this last month, breaking through that 100 pence per share target and coming in at 7.11%. And as with the UKW that I mentioned earlier, Trig is also in the video that I'd shown earlier on. You can find that down below. Rightmove, one that I have also set a limit order on. I'm just waiting to see whether or not that is going to trigger. If you think about going to buy a property, where do you go and have a look? You go and have a look on Rightmove. There are very low overheads for this company, carrying very little debt, hence why I'm looking at potentially buying into this and see whether or not I can benefit from some of the growth. As interest rates start coming down, we may see more properties being purchased as interest rates start to come down, and it still pays a dividend yield of 1.71%. But I would be buying this predominantly for the potential growth of the company. Rio Tinto, one of the few that are down over the last month, and this is down 0.99%, but it is paying a much better dividend yield than the other miners within my portfolio, coming in at just under 7%. Rolls-Royce in another portfolio that I have with Free Trade, which is just one of their general investing accounts. I do hold a number of shares in there which I wish I bought more of because it is sat at almost 400% up, and hopefully someday soon they will potentially think about bringing back a dividend, but I would rather they were using their money to pay off their debt in the first instance before they start handing me some money back as a dividend. Taylor Wimpey, and it's just gone ex-dividend and it's just made a payment, hence Taylor Wimpey due to go ex-dividend on the 1st of April, but being Easter Monday in the UK, it will have taken its sort of hit from the ex-dividend date. I then have the whole batch of different ETFs that I hold from FTSE 100, FTSE 250, the Developed Europe ex-UK, the Emerging Market, and the S&P 500 VUSA. And actually, the last stock that I'm going to talk about is Vodafone, and currently that is up 6.63% over the last month. And it is paying a ridiculous 11.22%. How long can this continue? I keep saying that, but let's wait and see whether we get a little bit of growth. So that is basically what I'm holding in my portfolio at the moment. There hasn't been a great deal bought into over the last month, apart from just the daily dollar cost average of £10 per day into my ETFs. You can go and have a look at the pie. I have that on Trading 212 if you want to have a look, and I'll also drop it down below. Exactly the same ETFs, 65% VUSA, 15% VFEM, the emerging markets, then 10% to both VUKE, FTSE 100, and VERX, the developed Europe ex-UK ETFs. I do the £10 daily DCA, and then I do the £307. I've done a video on which one is actually winning, the monthly versus the daily DCA. Go have a look at that video and try and guess. Before you watch it, stick a comment down below on which one you think is going to have performed better. But let's look at some of the dividends that I've picked up over the last month, and it has definitely been a dividend bonanza. So let's kick off. We had £6.61 coming in from Pfizer, and then IG Group paying me £11.66. They both came in on the 1st of March. Then Realty Income coming in with their £28.51, and I'm just going to reinvest that back in actually and sort of keep growing my Realty Income holdings and just ride that out and watch that actually grow in value. Here we go. We just have lots and lots of ETFs paid me on the 27th of March. So we had VUSA coming in at £37.29. You have VFEM at £5.98. VERX paying £3.16. VWRL paying me £5.13, and some of these ETFs sit in old ISAs that I hold, and this one actually sits on a Vanguard ISA from several years ago, but it still pays me that £5.13. Looking at the All World High Dividend Yield, that one, VHYL, is paid me £9.17. FTSE 250 VMID paying £7.52, and then FTSE 100 paying me £15.97. And then my final dividend of the month coming in at £20.68, and that was for Trig, the renewable infrastructure group. Many of you are interested in dividends, so why don't you go and have a look at this video, which talks about some of those larger paying dividend companies that there are within the UK. Thanks very much for watching, and I will see you in the next one. Cheers, bye.